Welcome to Blockchain Basement. On today's episode, we're going to talk about what to expect in the near term for Bitcoin and crypto. And we're doing this show just to answer BG's question. He said, what were the CPI numbers? Can someone just hook a brother up? We're going to answer that question right after this. Bum, 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 bum. You ready for this? I'm ready. Welcome.
If you're going to screw me, at least pull my hair.
Hell yeah. What you got?
They could start chopping off fingers. They're like, give me your seed phrase, but I don't know it.
Out to give the numbers out. And I was like, no, hang up the phone right now.
Or like when it dropped in 2020, was it like exciting?
400,000 to 600,000. The generational signals are now.
Level. So I don't even know if we're going to get back below there. But if we do, that's kind of where we...
Look at that. What you guys couldn't see was Drew was hopping over cords and grabbing drinks during that intro. So we're going to have a really good episode for you guys today. As always, please smash the likes if you don't mind. Right where right off the bat, we've got the Druth on fire, Crypto Sunglasses, the Nictator, Nick Demondi, the man by many names. He knows a lot of different blockchains and a lot of different names and a lot of different facts. Everything he says is financial advice. Always a good time with Nick on the show. And the lovely Hannah Hughes joining us here today.
Double H.
What?
Double H.
Oh, Double H. I thought you said Glitch. I was like, what?
No,
Glitch, one of my favorite characters from, is it Wreck-It Ralph? Is that Wreck-It? Glitch, great character on Wreck-It Ralph. Sidebar. All right, so we've got headline inflation coming in today. And shout out to all of you guys. We got Mike Vollmer, Mike King. Wow, 2 mics in a row. Bust Smurf, Danny Carney, TJ Salad, Mike Vollmer, Robert Young, John Carpenter, Mr. Wrigley, The Deadwood, TJ's Chicken Salad, BG, Mikatu, this is the Bitcoin way. Shout out to everybody in the OG status that have joined us as members. We really having a good time. We were chatting a little bit this morning in Discord. Let's see, Ralph San Miguel, The King Take, TJ Ooh, Daddy TJ Ooh Woo. Yeah, thank you. So the Discord's been a lot of fun. I know we've been getting more people into that alpha channel, so you guys can kind of see the stories that I share in there. Sometimes, a lot of times there's stories that I drop in there that we don't get a chance to cover on the show. Sometimes you'll get to see those picks beforehand. Like a lot of the stuff I pulled Friday, Saturday, Sunday, I didn't get a chance to get into yesterday. I probably won't get a chance to get into today because there's so much actual, news happening. So I'll save some deep altcoin picks and some of that other stuff for later in the week. Maybe if you guys want to front run some of that stuff, now you have opportunities to do that. So just if you join obviously subscribe on YouTube, but there's also now you can join as a YouTube member, and that gets you access to the Discord and hang out in there. We're gonna have a lot of fun stuff. And I believe I should have just checked. I think the NFT's ready. I could have showed that to you guys today.
Oh man.
It's a free claim NFT for all of you guys. It just shows Bitcoin Basement, sub 15K OG. We're gonna run it until we hit 15,000 subscribers and then cut it off. Yeah, I'm not in a black shirt today. I'm
surprised.
I haven't done laundry. I'll be honest.
That's literally my only feedback for this company is maybe sometimes TJ can wear something other than a tight-fitting black shirt.
Okay. Well, I can. It's summertime. I mix it up in the summer. So I got to show a little personality. So, all right. We'll get right into it. Okay, we'll check. We'll start with CoinMarketCap. Bitcoin still coming in just under 2625, 848, 1737 on Ethereum. A slight. I'm actually noticing the ETH dominance holding a little better than Bitcoin. ETH had ticked over 20 at one point. Now it's at 19.8. Bitcoin had ticked really close to 50, but now it's fallen all the way back to 47. So Red Jasper Kane, welcome to OG status. Glad to have you. We were looking before the show. If you look at the pullbacks on the weeklies, I mean, look at all these weekly charts. There's tons of, as we covered yesterday. We won't talk about too much of the bloodbath in the alts, but there's a lot out there right now due to a lot of the regulatory concerns. Once for lunch today, I ate I was actually a pork chop with a special. Tony made really good pesto. So Tony D's pesto sauce.
He tried to give me one first thing in the morning.
Yeah, he did. Me too. He came into my office at like 9:30. He's like, "Hey, you want some pesto?" I'm like,
a little early.
Maybe for lunch.
Tony didn't give me pesto.
Well, he likes me better.
Tony is over here cooking. He told me his lasagna costs like $100 and 6 hours to make.
Yeah,
So
his lasagna is top notch. Welcome to OG Status Crypto JPM. I hope that's not JP Morgan. We got our eye on you. I'm sensitive to that JPM phrase. But yeah, Tony D cooking channel maybe coming 2025. We'll
That'd be
see.
huge.
I'm working on him. He's just got to, he's warming up to it. No pun intended. So.
Tony.
Big Eats with Tony.
Yeah. All right. And we've got, I've got some crypto stuff and I've got some it's all crypto stuff, but some side stuff that we might get into if we have enough time. So I'm going to try to go through the CPI stuff pretty quick and the Hinman emails fairly quick. This was something I thought was pretty interesting. Lark shared it. I retweeted it, said, keep it simple, stupid. I'm a big believer in this, especially when it comes to Bitcoin. I feel like most people, and it's, we can all be victims of doing this. Obviously, if you're obsessed with something, you think about it, you talk about it all the time. Yeah. You kind of want you want to find more than that's really there. Like if you look at the timeline of the 4-year cycle, it's pretty clear. He's breaking it down very, very simply. He says, is it really this easy? Simple Bitcoin chart. Long-term downtrend line is broken. Monthly MACD edging closer to a bullish cross. Previous crosses have always signaled start of massive rallies. So this chart goes all the way back basically to the beginning. This is all the way in 2013. You have a big rally, big downside, major downtrend breaks. You get the upside, and then you've got your MACDs down here, very similar, switches over, and then basically from really 2016 to 2018 was mostly bullish, downtrend 2019, all the way up to the peak in 2021, downtrend 22. So this is basically just another way to look at the 4-year cycle on a graph. But if you break it down that simply, it really isn't that hard. You buy in times like right now, like again, we've just broken the major downtrend cycle. We're above it right now. We're long-term bearish. We're sitting right here. Same thing on the MACD. And, it just, to me, if you don't overcomplicate it, that's a really easy way to have a strong investment thesis and just say, look, I'm going to accumulate here. I'm going to sell at the top, and I'm going to do it all over. When I feel a long-term downtrend coming, I'm going to try to exit the majority of my positions and then wait and then do it all over again. And it's, if you keep it that simple, it's proved really well. So, all right, here we go. BG just wanted the headline number quick so he could leave. So let me give it to you. All headline right, CPI 4.0% year over year versus estimated 4.1 and prior month results of 4.9. Here's the running of all the details. So before I give you guys all the details, Nick, first gut reaction to the headline CPI being slightly under what was expected. What do you think? Okay, thank you for that analysis. Coming to Drew. Nick has no thoughts on the CPI. That was good. No.
It kind of feels like things aren't as exorbitantly high as they were a moment ago. Maybe that's just the energy prices that I feel driving around. I feel like food is always too damn high. Mm-hmm. Well, that's just because of how many children I have, though. So, it seems like, it's a slight improvement from what their expectations were. I do believe there's core that came in a little bit hotter than they was expecting. So it's basically a mixed bag of emotions right now. And I think as well, the markets are kind of thinking that we're not going to see another hike, which is really interesting to me because I was kind of sticking around the idea that we likely would have another hike and then stop. Now there's all these conversations that they're going to halt for a moment and then start them up again. And then immediately after that, do quantitative easing, just a roller coaster of action plans. It doesn't make much sense. Really what I would think is going to happen is another hike and then stop your increases. But I know the markets or the CME tool is not showing that right now. So.
Well, yeah, and they're playing a big game of balancing, and I agree. Logically, I think you're right. Either one more hike and then holding versus pausing now, and pausing and then getting back on doesn't make any sense to me. But strategically, it might give them more flexibility or more options. It is interesting to me. I feel like we could see the overall inflation trending down over time. Now, again, they're measuring year over year, so this is not. The money supply is still going up dramatically, and real inflation that you actually feel is going up. Don't get me wrong. However, the way they're measuring it is they are experiencing disinflation over the course of this year, and they're still very aggressively hiking and raising into this disinflation to create, I think, some of the pain and some of the chaos that we're experiencing in the banking system right now. Also, wasn't lost on me that all of a sudden, not 1 month after they removed the debt ceiling, now all of a sudden they feel comfortable pausing rate hikes. It's okay, because now we have no ceiling to what we can print and what we can create. sure, we'll just let the debt continue to run up at a pretty high number.
There's a question from Coors Light here. He said, I keep seeing real estate people saying home prices
Will climb once the Fed lowers rates again. Thoughts? Yeah, I mean they will basically. Now people have always say that. So when and what? But okay, when the Fed lowers rates, what happens? Mortgage, real estate rates will also go down. Not instantly, but within a couple months. So as rates go down, it gives more buying power to retail buyers, which makes it easier for them to qualify for raising asset prices. So yes, that will happen. It's not going to be quick, and I don't expect, we're not talking about cutting just yet. So don't get carried away. We're talking about not raising anymore, pausing. So a pause for the rest of this year means very high interest payments on a lot of the debt that's out there right now. And that's really what they're doing. They're locking debt they're packaging a lot of these debt deals that were coming up to having to be paid into much worse positions, unfortunately. That's what's happening with the United States. Of our interest cost is just absolutely going astronomical, which is why we have to keep borrowing more and more. And if we borrow at this higher rate, we're in really big trouble. We played with the sound a little bit today, so I will say the no heavy breathing today. We'll blame Taco for it. So.
For sure. Don't you think that if they raise any more on the commercial real estate interest rates that are going to have to be repackaged, are going to have to repackage those loans, I would see a massive risk to the banking sector coming from that.
We're talking two different things. Residential and commercial are in two totally different areas. But because you're 100% right. Commercial real estate is in trouble. It's about to get decimated because, especially in major cities, New York, San Francisco.
Blue states.
Yeah, well,
there's a coincidence.
Yeah, sure. It's circumstantial evidence, we'll call it.
All those peaceful protests really drove up property values.
They were mostly peaceful.
Yeah, it did drive up property values. But so we got all these big office buildings in expensive cities that aren't making their rent. They were, and they're up. They're even getting. We covered it yesterday. They're getting dumped. The lenders are dumping what would be considered top rate mortgages. Yeah, we have a shot of that. There you go. Give him that. Drew.
Oh yeah. Okay. Hold on.
DJ Flex.
Hold on. What? Let's give him the touch. He agrees with you. Yeah. Clearly, he's always watching.
He's always watching.
Yeah.
So on the commercial side, we're seeing big banks dumping those loans really bad on current loans, things that nobody's missed a payment. They're completely relevant. There would be no reason to dump those loans except if they're expecting major delinquencies to come. I do have some stats on that. Let me blaze through the rest of the
blaze it.
The Fed numbers here, and then we'll get to the rest of this. So
I did actually have a comment about CPI, but whenever you're done,
go ahead. Let me hear it, Nick, because I wanted to get it before I read all the rest of it.
Okay, so basically, inflation is burning up all the oxygen in the room, and it's keeping the middle class down. So all these numbers, until we get like wages going up and then the cost of living going down, all of this is just fugazi. I've completely lost interest in all inflation numbers now.
Yeah, they're really, and it's sad. They're not relevant to anybody, to most regular people.
Does anyone in chat, a +1 in the chat if you are feeling financially great?
Yeah.
-1 in the chat if you are not, if you're bearish on the future, -1 in the chat.
Yeah.
God.
No, I mean, it's true. It's the sentiment like this, and I'll be real interested to see what comes through on the chat. The sentiment overall is, everything feels tight. There's a lot of pressure. There's not a lot at the end of the month to work with when you're trying to make stuff happen. You don't have a lot of extra to invest into. You're just trying to survive, let alone thrive. And that's being created exactly what Nick's talking about. It is the inflation, and that's what I was saying. The real inflation is you've experienced close to 40% in the last 2.5 to 3 years. Now they're measuring year over year, month over month, so they can look at all these negative ones. So they can do all of this math and say, oh, hey, inflation's not that bad. We can get back to increasing the money supply again and pumping all our assets up. Well,
-69.
Hey, there's a +1.
Yeah, but guess what? If you don't have a bunch of assets that are getting pumped up with the inflation, it's getting harder and harder and harder for you to just eat and survive. So I'm going to cover some of these other numbers. It is important, to Nick's point, these are month over month, year over year. So these do not compare it good at all if you're looking at where you were in 2019.
100%. In 2019, I felt like I was done for, man. Like working my regular job and seeing the inflation coming, like, or the money printing, like, if it wasn't for crypto, I'd be negative 1,000 right now.
We've got anonymous ETC that's rich from all his Ethereum Classic mining, so happy for him. But everybody else is feeling. Oh no, we got a couple Bitcoin way. We got a couple people feeling good because of the crypto bullishness. So all right, everything looks good across the board with year-over-year disinflation or deflation in every category. Year-over-year shelter inflation
not
for
right.
Well, for year-over-year, it is.
Not in every category. For food, it's still up.
He goes into that.
Okay.
I mean, he's going to go through all year-over-year shelter for each month, year to date. January, he kind of just shows, 7.9, 8.1, 8.2, 8.18, and it's more or less holding. Fuel energy component down 37%, aligns with the 34.5 decline observed in the Adri monthly price of crude oil. That was in May. This will ripple through PPI even harder than CPI, which will then impact CPI. Let me assume this in CPI in the coming months. This was interesting, and I want to check on this one. Used car prices down 4.2% in May 2023. That's true.
And it's been tracking down ever since February.
New continues, that's what's interesting. New versus used. New cars seem to be going up. Used cars going down. This wasn't as fast as the April 2023 result of minus 6.6 or March 11. Yeah, so that's what you were talking about there. It's been trending down. Don't want to let quote unquote perfect be the enemy of good. This is still a major win and reflects broad-based disinflation. Food disinflation becoming stronger. Now, this is still not disinflation because these are all plus numbers. Go ahead.
They have to come down. See, this is I'm getting mad at Caleb. The used car prices have to come down because the interest rate is so freaking high.
Yeah.
None of this is positive news. This is all just regression to the overwhelming costs of just being an American these days. So yeah, the cost of used cars have to go down because the fucking car payments now are $700 a month average. That's insane. So none of this is good news. Continue.
And they're not able to sell them at a point. You have to get them off the lot. That's
that is
true.
true.
Well, yeah.
So yeah, there's a lot of factors playing.
Well, yeah, there's dropping, and then both of those things kind of feed into each other. They're not able to sell them. They have to get them off the lot. So what do they do? They drop the price because really they're making their money by doing the financing. So they drop the price of the car to lock these people into a bad financial agreement that they can then profit on for the next 5 years, basically.
Yep, brutal.
So all right, that's all we'll cover. That's all we have for there on that. This was another one. A lot of people. This U.S. CPI inflation hits lowest since March of 21. Expectations were 4.9, fell to 4.1. I just pulled this up just because it's interesting to see it on a graph. Obviously, they're celebrating, and this kind of shows Nick's point a little bit better. They're celebrating this as a huge win because it's lower than this. But it's still dramatically higher than anything we've experienced since 2017.
Yeah, that's twice as much easily. So.
So this tells the picture a little bit better. Then it's broken down: headlines, services, goods, food, energy. So you can see, food and energy being services, being obviously one of the biggest growth. Energy, pure energy up here being expensive. Food really opens up here in 2022, so this is where you can actually see the impact landing on regular people, and it's extremely this is a long tail. It takes time for this to play out. So we're just what we started to see yesterday of people loading up on credit card debt. People aren't just gonna eat less all of a sudden or change their lifestyle overnight until they feel more pain. So what's starting to happen is they're going further into debt to maintain the lifestyle that they're used to, and that's the pattern that gets us into this situation.
How's credit card debt looking?
Yeah, I've got it's terrible. It's the highest it's ever been. It's past where it was, I think, in 2007. We covered that yesterday. So here, I did like to see this just to see. This is the annualized inflation prints by month. So in June we were seeing 9, July 9.5, so still going up back then. August 8.2, September 8.2, October 7.7. So it is. This is the trend they're looking for. It is trending down. And again, that's because the way they measure it year over year, month over month. So of course, when you measure it May to May, and you've got 10% inflation in May 1 year, and then you measure it and you only have 4% inflation the next year. You say, oh, inflation's only 4%. It's like, well, no, it's 14% in the last 2 years. That's bad, you know? So, yeah. They're trying to put lipstick on a pig, still a pig. Yeah, a lot of people in the chat saying that, which I agree. It's just trying to make a bad situation look good enough to then go borrow more. It's like a business that's failing, that's trying to cook the books to make it good enough so they can, I mean, this is literally what they're doing. So they can go get another loan to keep operating the business in hopes to make a better profit this time, but then they just get deeper into debt. So then they cook the books again to get another loan, and we're in that repeating cycle over and over and over.
That's exactly what comes into my mind when the election comes out. Like, they're not going to be able to raise the rates and make things even worse on people right as they're trying to show us a bunch of political ads and things like that. I mean, they have to make you feel like things are going in the right direction and give you hope. That's the only thing they sell during elections. It's the only thing that works.
Yep. Well, and they've got a couple tricks that they can do to do that. And speaking of, you were asking about delinquencies on loans. So auto loans and credit cards are trending back to delinquency rates of the financial crisis. The secret to near 0% student delinquencies: just don't make anybody pay them.
Hell yeah.
So that's part of what they need to do. They need to be able to show people are making their payments, right? Mm-hmm. People are credit worthy. They're not, these aren't bad loans. These are good loans. We don't want to see delinquencies going up. So you can see right here, this is auto loan delinquencies and credit card meaning people not paying their bills, just going up dramatically Q1 2022. So that's right here. I mean, just credit card and auto loans. And then obviously student loans, when they put that debt forgiveness, basically nobody has to pay them anymore. Then all of these people that weren't now no longer delinquent, they're just not paying loans that, they're just, put on the side basically. So they can claim all of these people are assets that are continually getting bigger because they're just rolling the interest into them. Nothing's due on them. So they're never actually going to collect any of that money, but they can use that money to go get a bigger loan against it.
Doesn't that roll over in a couple months?
I believe, yes, it's supposed. Yeah, all that's rolling over in 24 at the beginning of 24 or end of 23, beginning of 24. A lot of the United States debt in general is, and a lot of it was rolled up based on this, and that's what people don't realize. The number one asset on the United States balance sheet is student debt. That's the number one asset they have that they claim against. Now, a lot of people aren't paying it. So to think that they will ever just forgive that and wipe it away is insane, because they use that number to go get a loan bigger than that. And that's how they run their whole business. And it's the worst Ponzi out there. It's very frustrating. So
Wait, so most people have been putting off student loan payments, and now they're about to start for everybody again. They're about to restart them.
No, they're about to. It's part of the new debt ceiling removal package. Is that they took student debt forgiveness off the table. Now, I don't know the details of which one.
Yep.
Now, I wouldn't say everybody. I'm sure there's caveats and loopholes and all that sort of stuff. But yeah, those payments are coming back. They're not going to they're never just going to go away. You might not have to pay them for an indefinite amount of time, but they need that on their ledger to show we are owed $1 trillion from the students of the United States. And so if they owe us $1 trillion with interest, we should be able to borrow at least $2 trillion with interest.
What could go wrong?
What could go wrong with that?
And they need it to support their campaign for the elections.
Yeah, they need it for exactly. And they need this, the students, basically the younger generation of the United States, to carry these mortgages more or less for the rest of their life.
Yeah,
we need them
education.
in debt, so we can be in debt. Yeah. Student loan crisis will smack them again. Yeah, it will. It'll come back.
Well, and people that are in debt are, required, like if you're in debt heavily, like most people are, I mean, that's what's kind of the driving factor for a lot of people day to day to pay your mortgage. So, you'll go to a job you hate, you go to these things you hate that you're not involved with, but you're literally just floating through life trying to exist because you have this looming debt over your head. And in my mind, like, the real wealth in life is owning your time and controlling your time, right? Like, that's the whole goal here behind crypto for me, is to take control of my time. And yes, I'd still work here, but I would not be working anywhere where I don't feel like I'm having an impact that I want to be having, and controlling that output. So, I talk about that a lot with people about what's the real value of making money. And If
They
you
like
just go
to-
create more debt with it, you're just building a bigger ball and chain. So,
Yeah.
very
They
sad.
like to go collect all of the high school graduates and take away their freedom. They're like, now you work for me.
Yeah, exactly.
Student loan debt is the only debt that you cannot file bankruptcy against.
That is true. They changed that after the 2008 financial crisis. They learned that. They learned because they ran up all of these mortgages that then went bad that people used bankruptcy to get rid of. And as soon as they stopped using mortgages to get that debt, you can watch the chart. As the mortgages in 2007 went, student debt and college tuition prices went through the roof in 2007. And in that same fail swoop, they passed laws that said that is the only type of debt that you're not protected in bankruptcy from, because they knew we're going to blow this debt bubble up again in a new asset class, and we don't want people to have a way out like they do with their mortgages.
They need a liquidity pool.
Exactly. Okay, so last thing I'm going to cover here, Fabian is probably my favorite account on Twitter right now. _Fabian HD shares all sorts of really good stuff, and very in line with my thinking. So I'm a little biased. Obviously, this is confirmation bias, but this is exactly what I feel. To your point, Drew, about maybe potentially having another hike in there. He says with no hike baked into FOMC tomorrow, it really always was, and I agree. Everybody's kind of been banking on them stopping when they said they were stopping from the very beginning. The weight will be on their updated summary of economic projections for guidance as to how many hikes may still be on the table this year. The end of year estimate was 5.1 last time, but that was the meeting after the regional bank fallout. Now we have runway, equity markets, and a labor market that isn't budging. There are signs of headline disinflation, but not nearly enough for them to signal weakness in their stance with the core components basically unmoved. Personally expect to see revision up to 5.4, meaning revising the target inflation from 5.1 to 5.4, and wouldn't be surprised to see it as high as 5.5, signaling at least one more hike and leaving room for two. Which again, if they come out with a stance like this, that when the market, even if they pause tomorrow, which is again 70% market expectation, or at least there was 70% market expectation that we would see that. He's talking about they could, in their speech, leave space for 1 to 2 more raises throughout the year. If they do that, it's going to have a pretty, I would say, bearish impact on markets as a whole. You're not going to see markets pumping on that. If they come out with a pause and dovish language, I think we're going to see a pretty good pump tomorrow, and people feel good going into the weekend. So. Yeah. We can also be pretty sure Powell will bring his most hawkish tone, so not dovish, to the presser, although we are at the stage where markets will look past that if new information is signaled in his speech. Hawkish, pause, and EV for markets overall, in my opinion. So, I tend to agree. I think we're going to see a hawkish pause tomorrow. I don't think he's confident that it's like, hey, let's get back on the printers. Everything's great. It's 90%, 91.9% now expectation for pause tomorrow. So yeah, I'm fully expecting a pause. Seems like the markets and everything's priced in as well, but I'm not ready to say pause for the rest of the year. I think they could sneak another rate. I mean, it's on par with what we've predicted. It's on par with what they've said. It'll be interesting to see kind of how it plays out tomorrow, and then that will play into the rest of the year. But it doesn't really change my overall thesis. It doesn't really change anything we've talked about here. You don't want to fight the Fed. You want to watch the money supply. We're back into money printing mode, like we've covered. Bank of Japan, People's Bank of China, and the Fed, all the biggest banks in the world, are on the gas right now. We're going to see the result of that very soon, probably through 24 and 25. You're accumulating assets right now while everybody's afraid. Things will be better, for you in the future as inflation takes hold, and you start separating yourself from becoming part of that middle class.
Yeah.
TJ, is a good way to think of it. The printer comes back on, but the interest rates, it's getting ahead of interest rates like a rubber band. And so the more we're printing money, but interest rates are not getting cut, it's pulling that rubber band tighter. And then as soon as you start to cut, it's
yes, 100. Okay. That's a great way to describe it. And basically, the reason they're doing it that way, that rubber band you're describing, that's holding back retail. But what it's not doing is it's giving them time, the big money, big banks, time to position, time to understand regulation, I bet we're going to see a brand new big exchange out in 24 and 2025 in the United States.
A crypto exchange?
Yeah, I think we're going to see another
FTX?
Yeah, it could be.
Yeah.
They've talked about bringing it back, and it could be another big U.S. Coinbase will get the runway, the clear stamp of approval runway, and I think I wouldn't surprise me to see another big U.S. competitor that we haven't heard of that comes out of the traditional finance world that's getting positioned right now to be a broker dealer institutionally, like to handle the stuff
NASDAQ.
What's that?
NASDAQ.
There you go.
They already said it. Yeah.
There you go.
That'll be NASDAQ.
And that's what that tension rubber band of they're printing and they're positioning and they're doing all of their stuff. They're keeping rates tight. That's putting the squeeze on regional banks. That's putting the squeeze on anything in the that's trying to jump that gap is getting squeezed right now. And it's setting up for big business to absolutely take over this industry for the next 25 years.
Yeah.
And so they're okay with having some new players at the table that got there before they were paying attention. Yeah, JP Morgan's already all over this stuff. They'll be involved in it for sure. And BNY Mellon, which is behind a lot of different stuff too, the oldest bank in the United States. They already are. They are Circle is Goldman Sachs is BNY Mellon. So.
Dude,
all right.
I'm so excited. I want to get cheaper altcoins this week.
Let's
what
do
if
it.
we get a rate hike? Or God, I mean, you were saying that they're going to pause, but I was hoping for another rate hike so I could get even cheaper altcoins. I want cheaper Cardano right now. That's what I want.
You got time.
Yeah.
You got time. We got plenty of time to accumulate altcoins. And I would recommend too, and I've got a few new ones here today. I'd recommend you guys dig deep for what you think are going to be new projects into 24 and 25. They're really hard to spot right now. Ones that are brand new that will maintain through next bull market. The closer you get to the halving, the easier they are to understand. Like, okay, but you need to have your ears up and you need to be listening. Like I'll talk about ZK Sync a lot. I know John, Drew, you've got some deep picks, or there's another one called Unibot. I've got a thing on right now. I don't think we're going to cover it today. Probably tomorrow we'll talk about some of these interesting things in within the niches that you feel strong about. For me, it's layer 2 scaling solutions. It's zero knowledge proof. It's decentralized perpetual dexes. I think a lot of those are going to do very well in the next market. So dig into those niches, see who's doing stuff within them. Unibot is involved with decentralized DEX trading, returns, that sort of stuff.
Yeah.
Obviously, in the name, you can kind of get an idea of what it does. ZK Sync, a zero knowledge scaling solution proof on Ethereum, adding higher throughput on Ethereum. I think, again, those are strong teams, strong investment, strong niches. Now there's you could get involved with them now and they could go to zero. They may be gone by the time you get to the next halving. Or they could absolutely crush through 2024 and 2025. And that's when you're getting, like for me, I found, and it's not like it was brand new, but I really learned a lot about Cosmos and Atom through 2019. So I was accumulating it and then same with Tezos. And Tezos has been around a long time, but it wasn't really one of the big ones in the 2017 market. So it's Solana. I bought a lot of Solana in 2019, and it turned out to be a really good choice in 2020 and 2021. Even though by 2020 and 2021, I wasn't as excited about the project, as far as the chain was performing. However, they did really well. Yeah, L1s. I like, I always like L1s or zeros, for crypto Steve Al. Overall, those have always been done the best for me. Whether that was some of the ones I just mentioned, Ethereum, Cardano, Solana, et cetera. Avalanche, you can get Phantom. Any of those, I think, are fine places to take a shot.
And it's like everyone thinks that these specific niches are going to take over everything, and all you need to do is take over a chunk of the market, even for a time being. Be a part of the narrative. Don't get necessarily married to that narrative. As you've seen, we've seen meme coins live and die. We've seen layer 2s come up, but they'll probably come up again. So yeah, I mean, it seems like it comes and goes. I feel like the ordinals thing is catching so much flack. It's probably going to be a really sought after niche in and of itself in the next market too. So
yeah, Johnny's all over that. So all right, we've got about 520 people here, and you're not 420. We know we're always going for 420 likes. If all of you could stop what you're doing right now, smash that like button. We'd really appreciate it. Drop a comment. What is your deep altcoin you're looking at right now that you're hoping to be your gem through 24 or 2025? Maybe we'll dig into some of those, cover them on the channel. So let's cover the Hinman stuff. That was the big thing today. I'll blaze through it. Obviously, it has big ramifications when it comes to the XRP case, but also could set some major precedent going forward for all of crypto. So it's been 5 years since Bill Hinman gave his. If you guys don't know, Bill Hinman, former chairman chair of the SEC, It's been 5 years since Bill Hinman gave his infamous speech, and through the SEC's lawsuit against Ripple and 7 court orders, we can finally share what happened behind the scenes through the now public email drafts of the speech. We now can see all Hinman ignored multiple warnings that his speech contained made up analysis with no basis in law, was divorced from the Howey factors, exposed regulatory gaps, and would create not just confusion, but greater confusion in the market. Refresher: Hinman, as head of SEC's corporate fin, gave a speech in June 2018 declaring that a token is not a security once it becomes sufficiently decentralized, and he invented factors to consider when making a fully decentralized determination. No Solorzano, TJ, level-headed view on alts. They bleed out into BTC ETH until early 24. Do you think BTC will continue to put lower highs until late 23, 24? Lower highs, meaning lower than the all-time high, or just it depends on
Lower
what
than
range?
a recent high, maybe, is what he might be talking about.
Yeah, if you're
like
talking
at
about lower
31.
than 30, a little over 30, most likely. I mean, I could see it going all the way up to 40 potentially at somewhere in the year, but generally ending up around 30 around the time of the halving. American Pool Guy, shout out to Nick for protesting this weekend. Thank you. Yeah, Nick.
Yeah.
Nick's,
He had to go puke because we're talking about XRP. So.
yeah.
Literally, I was about to say something.
That's so funny. So although Hinman claimed that the speech was his personal view, he and the SEC touted it as guidance. And the SEC chair, Jay Clayton, publicly pointed to it, despite the SEC repeatedly flip-flopping on the significance of the speech in litigation, remains on the agency's website. So yeah, so that's basically what this speech was. So your U.S. Securities and Exchange Commission official wanted to say the agency did not see a need to regulate Ether as it was offered in 2018. So they, the big takeaway from this speech, I would say the here's more or less the argument in the specific case at hand. The SEC is arguing Hinman's. Hey, we've got a special surprise.
Hell yeah.
Look who it is. There's a biscuit in the house. Somebody tell Jesus.
A buttery biscuit.
A buttery biscuit.
Shout out American Pool Guy. What's up, dude?
Yeah, he was appreciative of that. So, biggest takeaway or the argument is for the SEC that this speech given by Hinman wasn't supposed to give guidance to the market. It was just him sharing his personal opinion. And then as the attorneys for XRP or Ripple have argued, no, he was trying to give guidance. And if you kind of read through the notes and the back and forth, I would say they have a pretty strong case there because there's a lot of comments about that sort of stuff. So let's see.
Someone said the heavy breathing has arrived.
Oh gosh, heavy breathing's back, guys. No.
Oh my.
My biggest takeaway from the Hinman, this is Ellie Tourette. She's covered all this in pretty well detail. Biggest takeaway from these emails is that it seems the SEC officials who weighed in on the speech believed the goal was to provide market guidance and tried to write it in a way that would convey that. Thus, in the Ripple case, the SEC lawyer's argument that the speech was solely Hinman's opinion and not intended for market guidance would now be undermined, which I agree with. There was a lot. I don't know if it was where, I guess I just closed the article, but there was basically points where in the notes where people are giving him recommendations, whether it was in a first version of the draft or the final version of the speech, saying like, hey, if you say this, that might lead people to believe that. So if you want to word it this way, that might give more market, room for discussion when the discussion comes in the market. Basically saying like this is going to be used to set, to guide the market, and we need to write the speech in a way that allows us to do that, which kind of shows that was their intention. It'll be interesting to see how it plays out in court. Seems to be a slam dunk for me on the side of Ripple. There was also a couple other things. This in here helped me understand. This again, head of compliance at Coinbase, Paul Grewal sharing the regulatory gap quote. Basically, and we're going to read it in just a second. Proof from the Hinman emails of what we've been saying to the Third Circuit, to Congress, and to the SEC itself, that the securities laws are incomplete when it comes to digital assets. The security laws aren't meant to rule over all digital assets, and that many digital assets are not securities. So again, this is an attorney's field day to basically be able to pour over all of these words and incite and pick apart different meanings in different phrases. But when you read through this, this was pretty interesting to me. It's the difference between, I think the common enterprise is really where, and decentralization is really where the the divide of a security versus not happen.
Yeah.
So while we agreed that the central purpose of the Securities Act is to address the this is directly from Hinman's speech. So while we agree that the central purpose of the Securities Act is to address an information asymmetry, I think we worry that it does not follow that there is no longer an asymmetry once a network becomes decentralized. There are, and they're really what they're trying to prevent is insider trading when they're talking about asymmetry. There likely are still people who have far more information, i.e. Vitalik Buterin likely has more information than the retail purchaser of Ether. In fact, disclosure is likely to still be important to purchasers, and disclosure could help address the information asymmetry that is likely to continue to persist for some time after decentralization, which again, it's all open source, open code. So it should, everything being open source should check the box of disclosure, right? If everything's being disclosed, it's all transparent. You don't have to worry about disclosure, which is one of the main things the SEC's, working to prevent. Or basically obfuscation of information for the benefit of insiders. That's what they're trying to prevent, supposedly.
Yeah.
That's what their charter is to prevent. But the bigger point is that it's no longer an investment contract once there are no quote unquote efforts of others to point to. And this to me is the biggest, most important part he's talking about. It's no longer an investment contract once there are no efforts of others to point to, which is a very key thing when it comes to being decentralized. You don't have any central point of like, this is the decision making, this is the domain holder, this is the person who said yes or no on X, Y, and Z. So plus, without a group in control, there's no one to hold responsible for providing the disclosure. So again, if you don't have any one person you can go to hold responsible, how could you regulate it and expect it to be a common enterprise?
Can I say something?
Yeah.
It just from a hillbilly's perspective,
No, you're not.
this seems like once we don't have any specific person to black bag, then we'll leave you alone. That's what I heard it.
Yes. That's pretty much true.
Gary will be, Botsmack said, Gary will be replaced by a team and a director and won't be able to blame anybody.
Yeah, that's true. But to what you were saying, Drew, that is 100% accurate. It's like once it becomes too difficult for us to impose our will on you, then we'll let it slide. And that's pretty much what's happening. Once it gets sufficiently decentralized, there's nobody we can handcuff.
Mm-hmm.
Then I guess it's not a security. It's pretty much what he said. So, where was I? So the fact that tokens on a sufficiently decentralized network are no longer securities and no longer are required to register with all the benefits to investors of registration seems to point out what might be considered the regulatory gap that exists in the space. Meaning, okay, so if you're up here and you've got a token like Ether that's sufficiently decentralized, most likely not an investment contract. However, we do have tokens that aren't sufficiently decentralized, and so he's talking about are no longer securities and no longer required to register with all the benefits investors of the registration. So basically he's saying there's a gap in our regulation right now as to how we should categorize these things.
Like how big of a decentralized network do they need to be before you consider that? Before
you consider it to be sufficiently decentralized. We don't really have any definition for that right now.
That's exactly the point of the Howey test. Is Hinman is showing the Howey test is insufficient. It's still necessary, it's still useful, but there needs to be something new. Just like what we did with the internet. We're like, hey, here's this internet thing. We need to make sure that we have a soft touch. We have some type of guardrails so these companies aren't liable for speech on their platform, so we can give it a place to grow. That's what Hinman is. He's not articulating it, but that's what the subtext of what that is
exactly.
Like there is a gap.
There's a gap. And
so what do we do? Well, Gary just screws it up.
Yeah, Gary. So then the next person who steps in rather than trying to address that regulatory gap by adding rules and clarity, which is what the industry's been begging for, he's gone the opposite and made it as vague as possible and just done enforcement after enforcement action after enforcement action to try to create legislation through litigation, which is not what many people feel is the best direction for the industry. I do want to correct myself. These are comments on the email or on the speech, not actually the speech itself. So last line here. In other words, the speech acknowledges that there is an other category. It's not a security because there's no controlling group, at least in the Howey sense. Yet, like many other things, medication, credit cards, there may be a need for regulation to protect purchasers. So that was basically what Nick was just talking about. The Howey test doesn't necessarily cover this. There needs to be some kind of rulemaking and regulation around it, but what we have right now isn't clear. And I think that was basically what our industry's been begging for the entire time. And the SEC's refused to follow through with its charter, which is providing and creating those rules. So it's been very frustrating for the industry. However, I think it's going to get resolved. And this, interestingly, I've been predicting this resolution to come 2023 through early 24 since about 2018, 2019.
Really?
I've been saying we're going to get regulatory clarity in the bear market between the 21 top and this one, and that's why we're going to get the next super cycle. That's what's going to clear the way for not just institutions, because a lot of institutions are already here, but nations and sovereign wealth funds and the real money of the world to start coming into this market.
No more diminishing returns.
Yeah, exactly. It'll be the end of a diminishing return cycle. And and then it sets the stage for all sorts of stuff to happen on Bitcoin and altcoins and et cetera.
Two quick comments. I forgot the first one; it just escaped my mind. But Glenn says the Howey test is ancient. Look, bro, that is. I understand why you're saying that. That is a lazy way of thinking. Because just because a law is old doesn't mean it's irrelevant. You know what else is old? Women's suffrage. You know what else is old? Habeas corpus.
Code.
The Second Amendment.
Yeah, you know what else is old? The Second Amendment. All those things are old, but they are still very valid. Now, you need to engage a higher level of thinking. Increase your vibrations, my guy. Okay? Be thinking about this more critically than just old law bad, throw out old law. Okay? Get with us, okay? You're almost there. I don't know what the second thing was.
That was okay. All right, perfect. I was waiting for the second. Yeah, I agree, because what it is. It's not as much as a law as it's a case. It was it was the United States versus so and so Howey, and basically yes, everybody talks about it's orange groves. It was a guy that was selling not just selling land, but selling trees on the land and selling the fact that you were going to get return from the citrus. The oranges, they were going to produce revenue and you were going to get a piece of that revenue. And it was determined, okay, the people that just bought the land, that wasn't an investment contract. You're allowed to buy land, with the expectation of getting something in it of the future. No problem there. The people that bought the tree, they didn't buy the land. They were just investing in a tree that was supposed to produce revenue. That was what was considered to be an investment contract and a security. And yes, it created precedent. They were able to point back to it, and you were able to point back to all the arguments that were made throughout that case on both sides, and the way the judge determined what was what. And a lot of things do fit within it. It's been a very useful tool up until this point.
Yeah.
And I still agree with what Hinman was saying. What our industry has been saying is there's a gap between what was existing. The Howey test, it's a great tool to use for a lot of different things, but we need another tool to put in conjunction with it. And I think that would serve all of us better going forward, because we need the clarity here in the United States. We're getting absolutely left in the dust, and it's not good for us as a nation.
Caleb Marshall, there's only one side in my bed. It is always the dictatorship.
Jesus.
That's funny.
He says Jesus is old. He still has the whole world in his hands.
Oh, that's good.
You're not wrong. Show me the lie.
That's a good little song. All right, let me think. So I've got a lot of other things to talk about. I wanted to get through that stuff, so we'll save privacy for another day. All right, you want to talk about? Let's talk about. This is old news now. This is how long ago I've had this, but some interesting politics about the PGA and Live, Tiger Woods, and the money and where it all comes from. This is just a pretty interesting thread. So stop reading threads about office politics at the PGA. Forget about paying Phil $200 million and offering Tiger $800 million. If you want to grasp how Saudi Arabia took over American golf, you need to understand Aramco, the greatest cash generation machine in the world history. Let's dive in. So, you guys want to talk about this for a minute?
Yeah, let's check it out.
One in the chat, if you guys have ever heard of Aramco, one of the biggest energy companies in the world.
I've definitely heard of them before.
Absolutely dwarfs ExxonMobil, which is our the United States' largest energy company. So, but some of the way, this is the kind of information that I wish this is what they should teach in global economics, world history. If they would teach different ideologies of the way government works, like imagine, like you've just been taught your whole life, I guess they don't really teach anything about finance and money, budgeting, anything, but like everybody pretty much knows the United States, we run a deficit, and it's, we're going deeper and deeper and deeper into debt every single year. A lot of other countries, they actually run a surplus. They actually manage their books well. They run a profitable enterprise. And what they're able to do with those profits is make moves around the world and climb the ladder and change and shape the world in the way that they think it needs to be shaped, which is very scary when you look at, our nation versus, our nation weakening, other nations strengthening, mostly due to the economics. So you're probably familiar with Aramco. In fact, a lot of you probably have read books about it. The history of it's fascinating, but if Aramco is a new name to you, just know that it's the Saudi oil company, and it's absolutely prints money, a staggering amount of it. How much cash does Aramco generate for Saudi government? Think of it this way. In 2022, ExxonMobil, America's largest energy company, paid dividends of slightly under $15 billion to its shareholders. How much did Aramco pay to its owners in 2022? Twice that. XOM paid 3x, LOL, as if Aramco paid out over $75 billion, or 5x what XOM did. And since 90% of this is the key, 90% of Aramco is government owned. Most of that went directly to the House of Saud. So over $75 billion in dividends in just 1 year, but the dividends are just a drop in the barrel. Despite receiving about $68 billion of dividends from Aramco in 2022, the Saudi government received more, far more, from taxes, zakat, Islamic almsgiving, and oil and gas royalties. Converted from rials to dollars in 2022, these payments amounted to $155 billion. Wow. Just let that sink in 1 year. In total, in just the year of 2022, the Saudi government received about $223 billion from Aramco. Think of it this way. If Jeff Bezos converted all of his assets to cash, he would have about 2/3 of that. And so this is why a lot of people, when they claim richest man in the world, Elon Musk is the richest man in the world, or Jeff Bezos is the richest man in the world. Like, no, he's not. He's not even close to the richest individual in the world. You're just not looking at sovereign family, like real money, real wealth of the world isn't public. It's not based on a public stock of, again, Jeff Bezos, that a lot of times considered the richest man in the world. If he converted everything he has to cash, he's still 2/3 of what this family made in 1 year. 1 year, they made 2/3 of all of Jeff Bezos' assets. To show it visually, each square below is $15 billion. The red squares are the XOM dividends. The green are the Aramco dividends to the Saudi government, and the yellow are the dividends and taxes and royalties. Here's what the Saudi government received. And if we're gonna have to scroll out a little bit, but boom, that's what XOM shareholders got. That's what the Saudi government got. Can you guys see that? Yeah. Mm-hmm. Now, as we all know, it's not about how much you make, it's about how much you keep. And the Saudis do use much of this to fund public spending, but not all of it. The Saudi government, unlike ours, runs a surplus. Thanks to the strong oil prices, they take in more than they spend. A part of that surplus goes into the sovereign wealth fund called the Public Investment Fund, or PIF, which currently has about $650 billion of assets under management. They're reportedly going to they're reportedly going to grow that to a full $1 trillion over the next 2 years, and they're deploying it all over the world. You can see here where it's all going. Some of these funds are going into Saudi infrastructure projects like NEOM and its new infamous line project.
Gross. I hate this
just
so
said
much.
that in the chat.
Yeah.
Mike Bennett said that's why the prince is building the line. Look it up. I'm over here reading about it.
Yeah. But much of it's going all over the place. U.S. private equity, direct investments in green energy, Russia, Brazil, strategic important partners. Russia, Brazil, both part of BRICS. I think that is part of that strategy right there.
Yeah.
Be in the R.
And of course, golf tournaments, soccer leagues, and other prestige assets that help sports wash the government's record of human rights abuse and arguably pass complicitly in terrorism.
It's funny, they talk about human rights abuses. Wait till you all live 15 feet from each other in a singular line going through the desert. See what happens.
And
then.
you
It's
have
not
no
going to-
cars and no way to escape, and you're all just there.
You have seen nothing.
Yeah,
yet.
they make a lot of money because they absolutely abuse their citizenship. And this is something that Alex Gladstein, I think, really pushes this envelope hard. This is a big part of the sickness in the West is looking the other way at atrocious. Like they claim that they care about human rights, you know, in a lot of the propaganda that we see here in the United States, but they absolutely do not care about human rights whatsoever. They will look the other way to some of the worst human rights crimes that are going on in the world just to make some money. Now they're going to do it under the guise of the IMF. They're going to do it under the guise of the World Bank.
Yeah.
They're not going to say, oh, the US is doing this, but guess who owns these things? And it's really sad to see, and it's all greed based. It's all driven by, you know, incentives and money, which, you know, unfortunately that is what drives humanity. You know, but seeing this sports washing happen through all of this money, all of this oil, all, you know, this is all trade war politics. This all fits right into, you know, the inflation that we're experiencing, the money printing, you know, because we don't run a surplus, we run a deficit, but we have the money supply, you know, so we since we are the financier of so many things around the world, you know, we've built a debt-based system. You know, we can continue to go into debt faster and easier than anybody else. They don't really have much choice as we go into debt. If their currency is based on our currency, you know, it causes them to have to print more currency. You know, but they're all different philosophies on how to economically conquer or spread your mission across the globe, more or less. And so it's worked up into a point, but now we're seeing other nations, other ideologies, other missions, other you know, financial policies take hold. And it's getting a little scary when you look at, I mean, there's been a lot of clips of stuff going on in Europe, which is, you know, pretty scary, because they are very intentional about spreading their mission and their message, and they're doing it for a reason. And, you know, if you aren't intentional about changing the world around you, it will change based on other people that are being intentional. And so that's something I'm passionate about. You know, like, you don't have to change the whole world, but if you start with what's right in front of you, change your world. To me, I think that's the best way to take control of what's going on. What, do you have something there, Nick?
I mean, you don't want me to get into it. That's why I go downtown every weekend during Pride.
Yeah.
Like, seriously, but it's not just that. It's like, you can impose your will on the world around you, and it changes people's hearts and it changes people's minds. And you have been programmed to think that, oh, my vote doesn't matter, and oh, this doesn't matter, and if I just keep quiet, everything will blow over. Well, no, it doesn't. Things change when people stand up and change things. Okay. Otherwise, you get the status quo. Why do you think it took 300 years for slavery to get overturned in the West? Well, it's because people didn't stand up. And finally, there was a multiple watershed moments in multiple countries. And that's how you got things to be changed over to where they are now, which is still not great, but it's a hell of a lot better than it was a couple hundred years ago.
And that change is always painful. Always comes with pains. You have to be prepared for it.
The tree of liberty is watered with the blood of tyrants and patriots.
There you go.
I think it's so difficult. Like, the biggest obstacle that I come across when I'm trying to, like, preach all of this to people or just enlighten people, like, let them know, what do I do at work all day? What do I talk about at work all day? It's like they're so tied up in their day-to-day lives. They don't have time to sit and listen to all of this. They're like, I don't want to hear it. They tune it out. But if you keep telling them, like, keep repeating it, keep saying these things, keep adding more information, like, people will start to get it. They'll start to get it, and they might look it up one day for themselves and change their mind on their own. You know, you have to at least get them, pique their interest, at least let them know that these things exist and they're happening. Otherwise, a lot of people are just going to be floating through life, and they're never gonna look into it. They're never gonna wake up or realize the things that are going on.
Absolutely.
It's for a cause.
I agree. And somebody asked if we've ever been to UAE. Yeah, we've had some people that have been to Dubai and some of that stuff. And, you know, I'm not saying it's terrible always to live there, but there you see the biggest divide of the haves and the have-nots. Either you're mega wealthy or you're ultra poor for the most part. So the last thing here, and I agree with, this is pretty much the sentiment we were talking about. It's like, we can object to these investments. We should object. But if we don't understand the sheer magnitude of cash that the Saudi government and the PIF are going to receive every year, thanks to the Saudi Arabia's ridiculously advantaged oil reserves, we're always going to be a step behind. And this kind of just shows, you know, an interesting little breakdown here of oil and all that kind of stuff. It was just pretty interesting. So there you go. If you guys like that, I'll retweet this so you guys can find it. But
kind of an interesting take. I mean, that's not really a subject I've really looked into.
Yeah, it was. So. I mean, obviously the live stuff was really big, and, you know, when World Cup was going on, you know, Qatar getting that, everybody was, you know, kind of talking about some of that sort of stuff. So Samir, we're gonna talk about those alts some more tomorrow. That you're asking about the alts that I said to look at. We're gonna talk about some altcoin gems tomorrow. A couple other things. We got some interesting new marketing stuff. I'll tease you guys a little bit. I'll show a little. Nope, this isn't it. This is it. Isn't this pretty? Isn't that cool?
Pretty.
It's a QR. That's a real functioning QR code created by AI. Yes, and this is going to be the future of, I think, a lot of print media through QR and AI marketing. It's pretty. And we've got a bunch. We'll go ahead and just look at it. We'll go ahead and look at it. So this is another one. Nature's Maze. This is another. Here, pull me down real quick, just so it doesn't kind of ruin the. We've got Winter Wonderland. So you can scan any of these things and it'll take you to, imagine. Okay, you've got the winter version of Fortnite just dropped, and you're scanning this now instead. I mean, obviously you wouldn't scan a QR code for Fortnite, but flower got code, so you're in a magazine, you got a flower magazine now, and now this is like, hey, scan here. Now people are gonna have to get used to looking at this stuff and knowing, but like Anime Girl, like
I knew it was happening.
Yeah, you knew that one was coming. Yeah, go click
many more.
Scan this, and what else we got? Japanese painting. Secret art.
These are
they're cool, right?
People are going to interact with these just because they're excited about the imagery, but then they're going to see that it's likely a QR code. Like that's going to increase engagement.
Yeah,
so
funny.
much.
Like 5 years ago, people were like QR codes. Those are dumb, and then now we're just like QR codes are the best.
Here, fun fact. I'll wrap it up with this. So yeah, QR. Speaking about being ahead of its time, QR codes I think pretty much invented in the 90s, way ahead of its time. So in 2010, I was in real estate, and I was actually using QR codes on printed mail post out. We used to do printed mailers to about 5,000 different homes, and we would use QR codes on there to link to the website. And it was just like, I remember thinking at the time, like, nobody even knows what the heck this thing is. Nobody's ever gonna scan this QR code to get to our website. And it was so far ahead of its time. Like nobody was using QR codes until immediately the pandemic happened and QR codes became relevant overnight because every menu was a QR. All of a sudden, everybody knew how to use and interact with a QR code, kind of like Zoom, where it was like, Zoom calls. Yeah, they were a thing. People were using them. And then like, boom, overnight, it didn't matter if you were 20, 40, or 50, you knew how to scan a QR code or how to use Zoom. I still think it's still a little bit early, but as we continue to get more and more into the digital, like augmented reality of bridging digital and physical, I do think QR codes do that better than anything else. And it will become, if you're imagining browsing in augmented reality, so to speak, if you're walking around in a physical world with a heads-up display where you can see digital things, you could see a scenario where like, hey, I'm gonna have
probably
this.
Gonna auto scan it. Like you're not gonna have an option.
Yeah, well, it'll auto detect it, and you'd have an option. What do you double blink to like open it or whatever? I don't know what it would be. But yeah,
you pay $9.99 a month. Not to automatically come up.
Exactly.
Oh my God.
I was gonna touch on the menus. Like I'm like this is all. It seems orchestrated, but like what onboarded a lot of boomers in specific or above boomers into
When your waitress wouldn't come hang out with you anymore.
when you walk into a restaurant and they don't have menus and you have no
They're
option.
just staring at you angrily
Like
behind
the
their mask
reason,
in the counter.
Yeah, I don't want to.
You have no option. It's almost like
it's almost like they
part of
I see their value, but they
purpose.
try to get us to use these on patrols, and like we'd be dealing with like someone that's crazy or drunk or has a knife on them, and I'm not going to sit there and take a picture of a QR code while I'm dealing with someone that like might be hurting people. So like,
You're not gonna put it on World Star?
no, I mean, no, I can't do
World
that.
Star.
I'm trying to stay on the up and up, but like I see the use case for like menus or like situations where you don't have to like be quickly doing it or something like that, but like trying to put them on like job sites or construction sites, it's just a safety hazard. So
Also, be careful with QR codes. Someone can easily hack you. Don't just go around scanning QR codes, especially at like crypto conventions and things of
That's my
that
favorite
matter,
thing to do.
yeah,
because that's vulnerable.
It's
That's
just like clicking a random link. Yeah, that's a good call. Don't do it. Especially like you should have. Well, We'll talk about OPSEC another day.
Oh, that's a whole nother basement.
Yeah, you shouldn't be scanning. You shouldn't be clicking a whole lot of any links with anything that has crypto on it.
Yeah.
So last thing, and then we'll close out. J.P. Morgan reportedly to pay $290 million in the Epstein settlement per
Guilty.
FT.
No big deal.
Even though they had no idea what was going on, they had no clue. But yeah, we'll pay $300 million just to make this go away. So
Probably nothing.
yeah, probably nothing.
They definitely did know what was going on.
They're like, we don't have a case, do we? And they're like,
Like explicitly written in the Virgin Islands lawsuit that they knowingly and willfully were moving funds for sex trafficking. So
there you go.
There it is.
Just the cost of doing business for J.P. Morgan. They are always committing biggest and best crimes out there for all of us. So that's all we have time for today. We will be coming back with some more altcoin gems tomorrow. We love all of you guys. Enjoy the rest of your day. Get ready for FOMC tomorrow. Stack everything you need to stack. See you next time.
That was nice.
Bye.